Oh, we are live. All right. Hey, everybody. Welcome to Dumb Investing. I'm Lloyd. That guy there.
I guess I'm
That's Harry.
I'll introduce myself.
That's Harry. It's time to get dumb up in here. If you happen to have stumbled upon us and you're not one of our 7 regular viewers, you have happened upon the dumbest investing channel in all of YouTube's. And what we do here is we take some of our retirement money, we roll some random dice, we go to a random stock picker, we click it the number of times the dice roll was, and we do a little bit of homework, and we try to, as best we can, of the randomness that we got, pick a good stock, and then beat those Wall Street guys at their own game. So that's who we are. That's what we do here. Every night we roll, we pick our stock, we decide which one to go buy the next day. Then we do a review of our portfolio. It's full transparency. We don't hide anything from you. We're not paid to go to anybody's stock and push it. We're just 2 average guys. We work 9 to 5, and then we come home after working all day long. We jump on YouTube. We have a whole lot of fun. We laugh a lot, and maybe we learn 1% about investing. Now, one thing I can say is there are some much bigger dummies in this world than just Lloyd and Harry. Driving home today on Bloomberg, they were talking about that quasi-family hedge fund, I don't even know what to call it, that blew up last week and caused the market to just go crazy. Credit Suisse has ended up, they are writing down whatever, they lost $4.6 billion. And about 7 people so far have left the firm. And these are big VPs and executives, C-class people making buku bucks. They're all gone. So I thought it would be fun to jump in and maybe see if we could find Credit Suisse and see what their annual revenues and stuff were and see how big of a hit this really is. So let's do a little bit of homework on these guys. I just thought it was interesting. This is a pretty big thing that blew up recently, and it blew me away.
Well, I think the fallout of this is going to be a lot more than just Credit Suisse, right? Like there's talks that this is more and more banks. I heard somewhere in the realm of $110 billion in leverage. Like,
yeah,
that's just crazy. So there's another chapter in this book.
I think there will be. So let's put this in perspective. They said they're going to write off $4.6 billion. So last year they made $2.6 billion in profit.
Oh,
so they're writing off 2 years worth of profit.
Wow.
Whoa. Interesting stuff, huh? All right. Well, we're on to rolling some dice and picking some stocks. So this is the part where a random dice roll determines how many times we go to a random stock picker and pick some stock. 1, 2, 3. The first one we're going to look at tonight is HEFA. HEFA. All righty. We're going to go roll these dice again. And we're going to click. Oh, 1 click. All right. 1 click. Fez. I wonder if they make cool hats. And lastly, 4 times hot dog. 1, 2, 3, 4. IBEX. All right, we're going to start our homework here with IBEX. And I'm doing Yahoo just because I'm lazy. I really should be using our Webull. It's what our trading platform is. For those of you that caught yesterday's show, you will remember that on April Fool's Day, we went out and found a stock. And when I went to buy it on Webull, we found out that company was actually being acquired, and their stock was basically, all bought up, and there was even buying it wouldn't have done anything. So we got fooled. It was pretty funny. All right, so IBEX Limited. Let's see here. Who are these people? And what have
they got crushed today?
They haven't been around for long.
They were down 9.5% today.
Yeah, buy the dip, brother. Well, I don't know who they are, but they've made money. They're last 2 quarters.
So I'm just looking at some of the news articles here on the Weeble, and there's some references between Newegg and IBEX announced a strategic lead generation partnership. So I'm certainly familiar with Newegg. Are you familiar with Newegg, Lloyd?
Yes.
Yeah. So Newegg is pretty big computer parts selling company, and yeah, so interesting to see that something like an IBEX that I've never heard of is partnering up with a company like Newegg, which is fairly mainstream. So it's interesting.
All right. So here's what they say. IBEX Limited provides end-to-end technology-enabled customer lifestyle experience solutions. Take that at what you will. Does that mean they are collecting data when people are playing Candy Crush? I don't know. The company,
100%.
It totally does, right? So somehow I am assuming that they are doing some sort of tracking.
Oh, I
Right?
see. So this is the guys that track all of the stuff that you do on your Facebooks and your Twitters. So they do targeted marketing.
Yeah, I think you're exactly
Okay.
right. Yeah.
So now there's a lot in the news about that lately too, with Apple's new operating system and everything. It no longer, or at least presumably, it no longer allows this kind of tracking and stuff to happen. You actually have to opt into it as opposed to trying to opt out or being
Right.
forced to use it. So this is interesting to me, and I think people's privacy, as we live in a world that's more and more online all the time, it's going to become a thing. Like, we've been so remiss to what we do online and how much information that we send and track, that it's going to be coming to the forefront of more and more people about, okay, what's being tracked about me? How much do these companies know about me? Why when I talk about tires to somebody on the telephone, that I get a tire ad pop up on my Facebook, like all of these things, and people are going to be cluing into this more and more, and they're not going to be digging it. So I think there's going to be a big push for privacy. And I think companies like this, if this is truly what they do and that appears what it looks like, I think these companies are going to have a hard time pivoting to be profitable.
I'm with you, Harry. Let's go check out Fez.
Okay.
Yeah. So it looks much like many of the charts that we've seen. They are doing better than post-pandemic. It's taken them about 9 months to get back to zero, from where the pandemic started.
Okay, so this is an investment fund that corresponds generally to the total performance of the Euro Stocks 50. So it must be a European stock index.
Yeah, so this is giving Americans an ability to track the Euro stocks, right? So if you want to diversify your portfolio, this is one of the ways that you would do that.
Now, I don't know much about what's going on in Europe, but from what I understand is that, all the stuff that we have going on in North America, and the craziness and the bond rates and everything and yields and all that stuff going up, down, and interest rates and all that kind of stuff, I've heard tell that they are actually negative interest rates or negative yield rates.
Negative yield rates, yes.
In Europe. So that scares the living daylights out of me.
Why would that scare you? Your money is instantly worth less. I mean, come on.
That's kind of my problem.
I know. It's crazy, right? All right, let's go see what HEFA is all about. HEFA. I don't know that we're big enough to worry about diversification just yet. All right, and iShares. So
that's a lesson for another time, but it's a good one that we should talk about.
Absolutely. Because I don't know anything about it, and it was 30 years ago that I took classes. So, yeah, we'll talk all about diversification, you bet.
But again, this is only our opinions and strictly for entertainment purposes, so this is not financial advice.
No.
A couple dummies.
Whatever you do, yeah. All right, so this one is doing, let's see, hedge to U.S. index, gen component securities. All right, so this is just gathering, let's see, large and mid cap equities in Europe, Australia, and the Far East. The component currency is U.S. dollar. So they're kind of hedging the U.S. dollar with overseas companies.
I got to tell you, Lloyd, I'm
listening.
not liking any of these tonight.
I know. We got to pick one, though. It's so dumb.
Ay, Chihuahua.
Man, if you had to pick right now.
I mean, I do have to pick right now.
I know. I like this one because it's got, look at that return. This one has a 10% return. That's the only thing that gets me going.
We get a 2% dividend.
See what
Go fish.
Out. I mean, we need a random picker of the ones that we don't know what to pick. Man, this show is so dumb. People right now are just cringing. They're like, are these idiots really going to buy one of these?
Yes, we have to. That's the show.
All right. So their dividend, they only pay it out semi-annually.
Okay.
So it's not a big deal, but when you get it, it's fairly, I mean, it's 26 cents out of, yeah, see, that sucks. It is what it is, though.
Yeah, it's 2% or whatever it was.
Yeah. I mean,
Okay.
it'll maybe possible. Well, according to Powell, it'll keep up with inflation.
Yeah.
Yeah. So all of these kind of suck. But I think this one sucks the least.
All right. I can buy it.
All right. So
well, I mean, you can buy it.
I'll buy it tomorrow. All right. So this is what? Are we on episode 10? We're episode 10, right?
I don't know. Is it 10 or 11?
Or 11. Maybe. Yeah, it's 11. Okay, episode 11 on 4/6. Yeah, that's right. Because last night we were repicking for episode 1 where we got fooled. Those silly guys.
Man.
All right. So the market today, how'd we do?
Well, let me tell you, it was a bit...
You sound like you're softening the blow. I haven't looked yet. It was a very busy day in Lloyd's 9 to 5.
It was a weird day for the markets overall, though. It was generally really flat, and one of the most flat days that we've actually seen since we've started the show. So, I mean, we talk about flat days. Yeah, it's red, but I don't know. It's just flat. It's weird. Nothing was great. Like there was not a lot of movement. There was no.
Bloomberg said the volume was half of what it normally was. Yeah,
it felt like that. Like I wasn't paying really much attention at all, but it just really felt like a doldrum day. Like there was no momentum in anything.
Makes you wonder if a lot of the big boys weren't waiting to see if more cards were dropping from the.
That could be.
People may have been spooked a little. Yeah.
Well, if that's the case, I mean, I think there's some comfort in the fact that the market just stayed relatively flat then.
Yep.
There wasn't huge sell-offs, so that's good. We'll see what tomorrow brings, but it is really boring day. But you know what's not boring?
Tesla stock.
We can't pump Tesla too much, right? Like, it'll make the stock go up if we're only talking about Tesla and everybody's buying Tesla all the time.
I know.
And again, this is not financial advice. It's strictly our opinion. You do what's right for you. Okay, so in terms of our positions today, so again, sorted by losers to winners. Now, the good news is in our chart here, our negatives are not as low as our positives. That's good news.
That is good news. Yeah. Little reds, big greens. Yeah. It's so dumb. It's awesome.
So MTG or MGIC investments was down a little bit today, down 1.2%. So we are currently a little under our position of where we bought it at. Not huge. Our position's at 1390 there, and it closed at 1385 today. MGM today was down a little bit, but it had a pretty solid gain yesterday. So for
it had a great day.
Stocks that go up quite a bit in a day, you can kind of expect, unless there's some huge momentum going behind it, you can usually expect a little bit of a give back the next day.
Yeah,
would you say it on one of the episodes, Tuesdays are opposite of Wednesday?
Wednesdays are opposite Tuesdays. Yeah.
All right, so maybe a Tuesday was opposite of a Monday.
I don't know. That's what they taught you back in the 90s. I don't know if it's
I don't know.
Yeah.
I'm more of a learn as you go kind of guy. The best experience that I've ever had is one that you do yourself. That's when you truly learn.
Oh, that is not a good looking chart there.
No, it's not. So this is our hailing education group.
Oh.
So yeah, eventually this one will come back to us. Yeah, so it's down a little bit. It looks a little worse than it is, but okay. It's 54.30 and our position on him is 56.88. So we are down a couple bucks a share there. First Trust, we are still solidly above our position. So you did a heck of a buy there, down at 14.80. And
oh, this is great, folks. So this is, we are coming to you live. We are normal 9 to 5 guys. So things like that are going to happen. It's awesome.
Who even has a house phone these days?
I was going to ask you, dude. You've got, I don't even, do you circle it, turn it or whatever? Yeah. I don't know. Yeah. I haven't had landline for probably 8 years now. Since I moved to the South.
It's wild.
Talk about wild, dude. It was 88 degrees today. Woo! And this office is warm. And I'm wearing my jacket like a fool. And I'm glowing right now. It's beautiful.
Oh, you look great.
All right, greens. Let's look at some greens. Yeah.
So Credit Suisse today. So this is our investment from yesterday.
Yeah, that's great.
So we were in and bought at $3.34 a share, and we closed at $3.35.
Oh yeah, and that one's going to be paying us monthly dividends coming up. So
it's going to be great.
And part of our lesson tonight, we're going to talk about ex-dividend dates. So maybe we'll pull that stock up and see if we can read about it.
Sure. Gates Industrial up a little bit again today and well above our positions. Lazy Boy in the green, and again we are above. BurgerFi, we told you it was going to bounce back yesterday. Here we go. It came back. And we're still not quite where we need to be, but we're on the right path.
We're getting there. That'll be one of those recovery stocks. In a year, it'll be going crazy.
Everybody gets out and can have a burger again.
Yeah.
Socket Mobile was up. So it was down yesterday, up today. So this guy seems to be pretty volatile, hey? There's some big swings in this. It's kind of cool. Makes it a little bit of fun.
It does.
So the big reveal. Dun, dun,
the big reveal. Oh, yeah. We're up $9. That's awesome. Buddy. Yeah. That is great. All right. So let's go look at our CIK.
CIK. Do you want me to pull it up, or do you want to?
If you want to show my screen, I'm looking at the Yahoo page because it's very easy to see on the Yahoo page.
There we go.
So yesterday we talked a little bit about dividends and why you and I got a little excited when we saw them. And there's a couple of things people need to know when you're looking at a stock about the dividend. So one thing that they tell you is they're going to tell you what the forward dividend is, which means how much they're going to be paying you. All right. And then what the yield is, which means at the current stock price, if they pay that forward dividend for a year, how much does that equal? So an 8% return or yield is rocking when you figure you get nothing for putting your money in the bank, in your savings account. So that means you're going to earn 8% on your money versus nothing in your bank. All right. The ex-dividend date. What this means, the very simplest way to understand this is you need to own that stock the day before this date. If you own this stock on March 14th, you're going to get paid the dividend the following month, if it's monthly or whatever. So if you come in and you see an ex-dividend date that was yesterday, and you're like, oh, I'm going to buy this stock because I'm going to get my dividend, you're going to have to wait one cycle because you missed the date. You always got to come in the day before this date. You have to be the owner.
So, Lloyd, do we know that when exactly those dates are going to be, or do they fluctuate on a, let's say, monthly or quarterly basis?
For the most part, most stocks will have the same day. If they're a monthly stock, they generally have the same day. But you can go into their prospectus, so you can go to their website, and it will generally show you the coming dates, and they usually have like 3 months printed and ready to go.
Okay.
Yeah. So as we are shopping, we're going to be buying a stock tomorrow anyways, so it's not like we're going to be hitting these dates. But if you're in your private world and you're looking at 3 or 4 different stocks, look at these dates real close, because you might come in today under the window for one where you're going to miss the other one. So you may be, a couple of bucks ahead by choosing one or the other. Just one of those things to keep in mind.
That's excellent.
How's that for a lesson for the day?
That is some great financial opinion stuff.
Yes, for entertainment purposes only. Oh, all right. So that's our day, huh? We came in, we rolled our dice, we found some random stocks, we did a little bit of homework, we picked the best of the worst that we saw today.
Oh, man. I can hardly wait to be proven wrong on these, right? Like, I get so excited about some of these.
I know.
And yes, they're going to be rocket ships, right? But, maybe it's going to be one of these ones that it's just like, oh, man, this one's a dweeb and a dud. And then maybe it just takes off. You never know.
We're going to be like that broken clock. We're going to be right twice a day, man.
Well, hopefully in the long term, we'll be right a little bit more than that.
We are. This is going to be great. And we want to tell all you guys down below, click the link. Webull, put $100 in there. You're going to get one free stock. You're instantly saving for your future. You're an investor at that point. Have some fun with it. Do a little bit of homework like we are. But know the sooner you get started, the bigger that mountain is going to build. I know for sure there are going to be people that look at us in 5 years and think those two dummies started with nothing and look how their pile has grown. It's going to be crazy. And we're going to go back and review some of these old videos. Hi, future Lloyd, future Harry. But really, guys, start as soon as you can. Start $100. I know that's a big chunk of change to a lot of people. But just do it. Just do it and get started and buy one stock. Go buy, you hear us talk about it all the time, and I don't know why. It's just because it's the easiest one that comes to mind. T. It's AT&T. They're going to pay you 7%. I mean, gosh, it's that easy. And then once you start getting that kind of money, you can start rolling it, having some more fun, and you'll go find something. You can go study, do you want growth? Are you going to go buy a fractional share of Tesla? Because, man, you're going to go to the moon. I mean, there's so many things you can do, but you got to get started. Just like Lloyd and Harry.
So much to unpack there. What's a fractional share? Yeah, that's another.
Another lesson. We'll do that later. I don't even know if Webull does it. We probably should check that out.
I think they do.
I think they do, yeah.
But we'll have to verify our thoughts on that. So
we'll do our homework for all 11 of you that watched yesterday. Thank you so much. We love you guys to death. And don't be afraid to leave us a comment. We would love to read your comments, especially if you have questions. Man, it would make us so overjoyed if somebody actually asked us a question and we could get to do some research and homework and stuff like that. So click the link, put $100 in, get your free stock, become an investor, and whatever you do, don't trade like Harry.
Don't trade like Lloyd. Hit the like button. Don't forget to subscribe. Hit the dislike button if you want to. Totally up to you. Oh. Well, I mean,
people, someone's going to. Did you hear YouTube was thinking about getting rid of the dislike button?
Huh. Yeah. I did not. Why would they do that?
I
Just
don't
so
know. We
don't
should
hurt
burn it
people's
up.
feelings?
Everybody hit it. Just hit it and see what happens.
Yeah,
Like
I
15
like that idea.
times.
15 times. I think it goes like on, off, on, off, on, off, on, off. Anyways, everyone, have a great night. We will see you tomorrow.
See y'all.